Of course, you've taken a look at all the numbers when it comes to inflows into Africa, and they really do paint an interesting story. As I was saying earlier, when you look at overall external flows into Africa, it's really FDI which dominates flows right now. $54.4 billion in 2011, and then of course donor aid sitting at $48.4 billion. So suppose the good news story is that we're really tipping away from reliance on donor aid in Africa.
Correct. The importance of investment flows into Africa, how crucial for the continent. FDI, foreign direct investment, by definition, 10% stake in an African company with voting rights. So it is crucial. You are seeing direct investment. You're seeing a voter confidence into the corporates, which are starting to expand. And the total number, $152 billion, 2011, post the credit crisis, 2008, everything looking a bit more bright and positive.
When it comes to the role of China, it's also very important to point this out. Of course, when you look at the trade numbers, trade between Africa and BRICS, it's really China that dominates. I mean, trade was around $10 billion back in 2000, and now sitting at around $165 billion. That's of total BRICS trade of $195 billion. And of course, it's China that is going to continue to dominate when we talk about trade flows, specifically with sub-Saharan Africa.
Crucial bilateral trade between China and Africa. A lot of market commentators say it's a match made in heaven, and that is that China is seeking the natural resources available in Africa, and Africa is seeking infrastructure and project and trade finance that is handily dealt out by the Chinese. The one number to look at is 2015. You expect the number to double. Bilateral trade between China and Africa up to $300 billion.
And I suppose the fact that China in the spotlight today with all the data that's been out really highlights the importance of China and 7.4% year-on-year growth there. But let's just focus to the investment flows that we're seeing from the international market, because there are interesting trends there when you break it down according to flows into equities and flows into the debt market. But overall right now, how important a source of capital is this international investment?
It's crucial. Obviously, we expect financial capital to double over the next 10 years, and that is as a percentage of GDP. Historically, banks were lending capital and aiding growth in Africa. We would expect the bulk of capital to be those funds being held by asset managers and the non-banking financial institutions. And if you look at real money accounts, that's the pension fund money and life company money. Your and my money being invested into emerging markets in Africa, that dominates globally 85% of your institutional assets under management. Most of it is in the USA and Europe, but Africa, as part of the emerging market arena, is also getting its say. And when you look at dedicated African funds, we estimate that on the fixed income side, it's about $30 billion into fixed income in Africa. $20 billion equity specialized mandates, and private equity about $12 to $15. So it's crucial and it's rising.
So to what extent is the liquidity factor really playing a role here when it comes to the fact that we've got more money, as you say, dedicated towards the fixed income side as opposed to equities right now?
It's amazing when you look at the market capitalization of the listed African equities, it compares very favorably. It's 1-to-1 with sovereign debt. That's your government bonds, government T-bills, and your corporate debt. But when you look at liquidity, listed African equities is around 5% liquidity, and the rest of the fixed income and sovereign debt market commands about 95% of the liquidity. So it is something everybody's looking to work on. As soon as there's new issuances, IPOs, secondary offerings from the listed corporates into the market, the demand is there and the liquidity will rise. Yep. But at the moment, it is one of the concerning factors.
So where's liquidity improving the most? If you had to break it down by region or break it down by specific stock markets, are you able to hone in on any specific areas where you are seeing big improvements when it comes to that liquidity factor?
The more mature African markets, Nigeria in itself is evidence of increased foreign flow regarding the inclusion in the JP Morgan World Index and immediately we've seen inflows, we've seen yield compression. We would expect $1.5 billion of inflows into the country. So Nigeria, very high in concentration. Kenya should pick up. It's the East African hub. And then select markets like Ghana, like Uganda, where there were higher yielding currencies. When the currencies have been sold off, investors see cheap entry and they are yield hunters. So on a case-by-case basis.
When it comes to the role of domestic capital moving into African markets, moving into the debt or equity side of things, the reforms that we're seeing in the pension fund industry locally, or rather across sub-Saharan Africa, really seem to be a catalyst, as some are saying. Is the excitement around this warranted? Because if you look at, for example, Nigeria's assets under management, just when it comes to pension funds, you're sitting at $15 billion there, and Namibia is standing out $9.5 billion. But is this excitement warranted, as I said?
It's very excited. This is my actual mandate covering the in-country domestic pension fund managers. And every time I go on my roadshow, we talk about the expanding mandates where they can start investing cross-border into Africa and internationally. If you look at Nigeria, there are commentators that say that pension fund assets are growing up to 30% a year. So we would expect pension fund assets to grow by at least $2 billion a year and $500 million in Ghana. When you look at Namibia, a lot of the fund managers access South African liquidity and they can invest in our instruments here. So it's very exciting. Pension fund reform, it should help the local markets in terms of liquidity, and eventually it should give the domestic investor the opportunity to invest internationally.
So Mark, of course, we've spoken about trade, we've spoken about donor aid, we've spoken about international investment flows. What about the private equity space? I mean, how important is it right now when it comes to overall money moving into sub-Saharan Africa?
Currently, your asset allocation amongst the domestic investors is around 40% cash or money market, and they are looking to unlisted private equity as an entry point. There have been pension fund reforms I've mentioned in West Africa, where now there's allocation of 5% of assets into unlisted private equity. We've already said that the private equity funds being held in Africa is about $12 billion. South Africa, it's about $12 billion. So as mode of access and to get liquidity into corporate Africa, it's crucial.
Yeah, and of course, as you say, you might then start seeing those assets then being unwound into listings.
Private equity, correct. On the exit strategy, it either goes listed equity with an IPO, it could be sold the company to a trade buyer, or you generally roll the private equity stake into another term by the issuance of either senior debt or mezzanine debt. But the opportunities are plentiful. Everybody's rushing into Africa still.